What's going on, everyone? Welcome back to this multi-time frame forex forecast. We're going to be going over AUDUSD. Now, before we actually go into actually breaking down this particular pair and showing you what I see and what is possibly coming into fruition, I do want you guys to like this idea. Not only does it support this channel and this profile on TradingView, but it also helps and gives other people the opportunity to see this as well. I say this all the time, there's enough money in the markets for everyone, especially right now with so much volatility. There's no need to be greedy. So do us and everyone else a favor, like this video, like this idea, comment your ideas and pairs you want us to cover in the future videos as well down below. That being said, let's just get straight into it. So this is AUDUSD, and as always, I do have this already marked up, so all I'm going to do is just reveal some of the items and kind of explain to you more or less what I was seeing. So first, I wanted to start out with you can see that this is the all-time low, the previous support on the monthly time frame. So I had marked that up because this is a significant area, as you can see here, it being the previous all-time low, and that's why I decided to mark that up. It is obviously support. You can see on the monthly time frame, not only did we test below that, obviously with this big week down here, but we also bounced straight from there as well, and you can see with this bullish candle closing directly above that. However, we still have a lot of bearish momentum on the monthly and on the weekly time frame. We still haven't broken through, and right now I'm going to be showing you quickly that we are seeing some resistance on this weekly time frame as well. So we're still in a bearish momentum on monthly, weekly, and that's why I wanted to bring this in to consideration. You can see that we do have some structure here. Previously, we have support here, and we're starting to get some consolidation around here as well. Well, what happens is this actually lines up with the 61% fib of this monthly leg, just to show you real quick. So swing high, swing low. You can see this is on the 61 fib level. So this is 61 fib plus structure, previous structure on the weekly time frame. And I just wanted to highlight this real quick that we do have a descending trend line as well on the monthly time frame. So it's another good indication that we are still in a bearish area, because we're still going to be respecting this descending trend line. So the fact that we're looking at shorts is still positive and not necessarily confluence enough for us to be taking a trade, but it's still confluent, showing the general trend direction for these time frames. So now that we got that out of the way, we could kind of explore where we would want to take this thing. And what I want to do is take it from this particular leg to the 127 fib. And as you can see here, we have a 1 to 3.85 risk to reward ratio. However, the one caveat is obviously we want to try to get our trade to break even as soon as possible, because this is a previous all-time low. So what that basically means is if price does come down here, we still have a high probability of it respecting this area as significant support and bouncing it from here. So what you would ideally want to do is place it to a break even as soon as possible, so that you can actually test this area and decide whether or not you want to try to reach your TP1 risk-free, essentially. So that's the idea, that's the goal, that's the objective. But you can see right here, if it does end up going towards this all-time low and you're having to close it out manually, it is only a 1 to 3.6 risk-reward ratio. Now, assuming you're going to be risk-free at that point anyway, so it wouldn't necessarily matter. It'd be a infinity risk-reward ratio. But these are not ideal parameters, so this one is in fact a riskier trade. But this is AUDUSD, and like I said, I am looking for shorts. It is in confluence with this 61 fib and including some structure. So that's basically one piece of evidence, two pieces of evidence. So 1, 2, we got this descending trend line, which is giving us a general trend direction. So you could consider that as your third piece of evidence. That being said, like always, make sure that your entry conditions are satisfied prior to entering any trade, and make sure obviously you're using proper risk, especially in volatile times such as right now during COVID. So that being said, I appreciate you guys checking out this video. Hopefully not only was it educational, but it was also extremely informative, and it gives you an idea on how to analyze the market. That being said, I'll see you guys in the next video. Later.